three more property investment strategies that are perfect: renovations, established properties with subdivision potential, and developments. Because you know what you can buy a property for, how much it costs you to renovate, and what you can flip it for. This is more of a medium difficulty level. It requires a minimum deposit of $140,000. There often are lower risk strategies which I love. While you're getting your council approval. Hi, my name is Roy and welcome to Roy Talks Property. On this channel we discuss everything related to property finance, and the different strategies available for you today to build wealth through real estate. If you're interested, make sure you subscribe, because I'm on a mission to help you get all the knowledge you need to become a serious property investor. Your support is greatly appreciated. In today's video, we're exploring three more property investment strategies that are perfect for those who have a bit of experience under their belt and they have a good foundation of cash flow properties, which we discussed in the previous video. Today, we're gonna take a deep dive into exploring renovations, established properties with subdivision potential, and developments. So stick around and let's get started. So the first strategy we're looking at today is renovations. It's more of a medium difficulty level and requires a minimum deposit of $50,000. So you don't need a whole heap of money to get started, especially if you're targeting the 200,000 mark. What I love about this strategy is it allows you to manufacture equity or add value to the property, and it gives you a lot more control as an investor, because you know what you can buy a property for, how much it costs you to renovate, and what you can flip it for. A renovation property usually sits on a bigger block of land, so obviously it's great value for money. Last but not least, it's fun. It allows you to express yourself a little bit more and your character shows through the renovation. Renovating a property can be rewarding, but it requires a certain level of expertise, especially if you're not familiar with building or handiwork. Taking on a renovation project can be stressful sometimes, especially if you don't have experience in that kind of projects. Additionally, it's often time consuming, so you need to be careful with the time component here. And if you're doing a full-blown renovation on a property, it might require council approval, and that's kind of an annoying process that you have to go through as an investor. When renovating a property, there are certain risks to be aware of: delays, cost blowouts or overruns, and unexpected expenses. These things can happen in any renovation project, so you need to be prepared for unexpected expenses that may come up. So it's very important to have a buffer in place and to have a relationship with good, reliable service providers, your builders, your traders, etc. And don't forget to have a solicitor to review your contracts before you sign on the dotted line in order to protect yourself. With some preparation and the right help, you'll be well on your way to renovate a project successfully. By the way, if you want to see an example of a renovation strategy, make sure to check out this video where I explain the process and the steps that you need to take in order to do your due diligence on a renovation strategy. The second strategy we're looking at today is purchasing an established property on a bigger block of land that has a subdivision potential. This is more of a medium difficulty level. It requires a minimum deposit of $140,000. That's 3 times the amount of money you need for a renovation project, and you can buy a property from around $550,000. If you want to find out where these markets are, drop me an email. I'll be more than happy to chat. What I love about subdivision potential properties is they have the potential to do renovations and add value to the property, and they have the potential to develop and subdivide the property down the track. They also generate an income while you're getting your council approval, and generally, because of the bigger land component, there often are lower risk strategies, which I love. And obviously, a subdivision project also has its own risks. That's why it's very important to have a higher deposit and a buffer in place, because sometimes council approvals can take a while. And if the market changes while you're getting your council approval, whatever you had planned to sell the block of land for upon subdivision, that sale value may drop, and you could end up overcapitalizing on your project or even not make any money at all. So to mitigate these risks, it's very important to look at similar projects around your project. So for example, look at projects in the same street and what other vendors or investors have done to their blocks of land. Understand the comparable sales and how much you can sell the end product for, and make sure that your application to council is a successful application. You don't get knocked back or go back and forth with council, because then your timeline will blow out. Obviously, work with a reliable team, and if you can, negotiate a delayed settlement. That means you can go out and get your council approval without having to settle on the land and have a mortgage. If you take these simple steps, you can definitely mitigate the risks around subdivisions. The final strategy we're looking at is the big kahuna. That's the strategy that everyone wants, and that is developments. This is more of a medium to hard investment strategy. It requires a minimum deposit of $300,000, and the total cost of a project like this would be sitting around the $1 million mark. And obviously with big budgets come big advantages. So a project like this would give you higher profits, which are always nice to have. It could be a great side business for someone who's working full-time on a decent income to have a side business of developing properties. And what I love about it, just like subdivisions, is that you can rent the property out while you're getting your council approval. However, there are some disadvantages. Developments require obviously more money. Not everyone has $300,000 lying around. It also requires a higher income in order to service the higher debt, especially the fact that you're not going to be getting great cash flow from this property while you're applying for your council approval. Last but not least, being a development, councils can take a little bit longer for you to get approved, which is obviously very annoying for you as an investor. And when developing a property, there are certain risks to be aware of. The risks are quite similar to when you renovate a property, and they are build delays, cost overruns or blowouts, unexpected expenses are also possible. So it's very important to be prepared for these expenses. Make sure you have a buffer in place, and in order for your project to be a success, make sure you link up with good, reliable and honest service providers that can help you along the way. And don't forget to cover yourself legally. Make sure you have a good solicitor review your contracts, and your project should be a success. And don't forget that if you want to do developments, before you start with this strategy, make sure that you have a strong foundation of good cash flow and capital growth properties under your belt. These are lifeboats that you can rely on in case your developments go south. Thank you so much for watching, and if you haven't seen part 1 of this video, you can check it out here. Thank you again for your time. I really appreciate your support, and I'll speak to you again soon.